Argentina dropped a bombshell that's making waves worldwide, removing most of its capital controls, known locally as el cepo, or the clamp. If you're wondering what this means, why it's a game changer, or how it impacts travelers, investors, or anyone eyeing Argentina, you're in the right place. We're diving deep into the details, answering common questions, and uncovering lesser-known impacts you won't find on most news reports. Whether you're planning a trip to Buenos Aires, considering investments, or just curious about Argentina's economic shift, grab a yerba mate and let's dive in. So, what are capital controls and why did Argentina have them? Well, let's start with the basics just so you have a good understanding of this. So, capital controls are government restrictions on how money flows in and out of a country, often used to stabilize a currency or prevent economic meltdowns. In Argentina, these controls, dubbed El Cepo, were introduced in 2011 under President Kirchner and tightened in 2019 under President Macri to address a crashing peso and shrinking foreign reserves. They capped individuals at buying $10,000 per month, restricted companies from sending profits abroad, and required central bank approval for foreign currency transactions. Why were they needed? Well, Argentina has faced decades of economic challenges, sky-high inflation, it was 2011% in 2023, a volatile peso, and multiple debt defaults. The controls aim to curb capital flight, where people and businesses convert pesos to dollars and move them offshore, weakening the economy further. But El Cepo also fueled a black market for dollars, with parallel exchange rates soaring above the official rate and scaring off foreign investors. That's why the old tip used to be when you go to Argentina, bring dollars so that you can exchange them at the unofficial rate, and you basically used to get double the amount of Argentine pesos. This week, on April 14th, 2025, President Javier Milei, a libertarian championing free market reforms, announced the removal of most capital controls, backed by a $20 billion IMF loan. It's a bold move to open Argentina's economy, and we're breaking down what's changing and why it matters. So, what changes with the removal of capital controls? What exactly happened this week? Argentina's central bank lifted major parts of El Cepo, freeing up access to foreign currency. Individuals can now buy dollars without the $10,000 monthly limit, and companies can start to repatriate profits in 2025, though earnings trapped before 2025 remain restricted. The peso, previously pegged to weaken 1% monthly against the dollar, now floats within a currency band of 1,000 to 1,400 pesos per dollar, expanding 1% each month. This change, supported by a $12 billion IMF disbursement and $2 billion more expected by June, aims to rebuild Argentina's depleted reserves, which were negative on a net basis. Economy Minister Luis Caputo emphasized it's not a devaluation, but if the peso hits the band's upper limit, it could weaken by up to a third, sparking short-term volatility. Here's a lesser-known detail. The central bank is easing restrictions for non-resident investors, simplifying fund transfers through the Mercado Libre de Cambios, the free exchange market. This could draw foreign investment into Argentina's mining, energy, and tech sectors, which saw gains this week. It's a high-stakes step towards economic normalization, but it's not without its risks. So how does this affect travelers to Argentina? If you're planning a trip to Argentina, you're probably asking, how would this affect you? So the removal of capital controls is in many ways a big win for tourists. Previously, travelers faced a confusing exchange market. The official rate was far weaker than the parallel blue rate, quote unquote, forcing many to use black market exchanges for better value. Now, with freer access to dollars, exchange rates are aligning closer to market values, making Argentina more affordable. For example, a steak dinner in Buenos Aires that cost $20 at the official rate might now be cheaper in dollar terms. You can exchange dollars at banks or authorized agencies without the hassle of street dealers, or what are they called? Casas? But they used to have these spots, and ATMs are going to start offering better rates as the black market fades away. This makes budgeting easier for trips to Patagonia, Iguazu Falls, or Mendoza's wine country. And here's a hidden perk. The relaxed controls simplify payments. Many Argentine businesses, from hotels to tango schools, now accept dollars or international cards at competitive rates, reducing the need to carry stacks of pesos. However, expect some volatility. Monitor exchange rates before converting large sums, as the peso weakened in official markets this week. Bring a mix of dollars and cards for flexibility. The end of El Cepo is a beacon for foreign investment, a core promise of Milei's administration. With the IMF's $20 billion loan and $10 billion from the Inter-American Development Bank, Argentina's reserves are more robust, signaling stability to the global markets. Here's a lesser-known opportunity. Argentina's mining and energy sectors are primed for growth. On X, posts noted that companies like Abra Silver and Cerrado Gold surged this week as investors bet on Argentina's openness. The eased rules for non-resident investors means you can move funds into Argentine stocks, bonds, or real estate with less bureaucracy via the free exchange market. UBS analysts predict that this could significantly enhance foreign direct investment (FDI) prospects in Argentina, especially in areas like lithium and shale gas. For businesses, the ability to repatriate profits is a game changer. Previously, foreign firms were trapped with pesos they couldn't convert, deterring investment. Imagine, would you invest in Argentina if you wouldn't be able to get the money out eventually? No, but now you can. So now companies in Argentina's Vaca Muerta shale gas field or tech startups in Buenos Aires can plan long term. But some controls persist. The pre-2025 earnings are still locked, and peso volatility could inflate costs. Obviously, there's going to be some growing pains this year. But investors should work with local financial advisors to manage taxes and currency risks. If you're looking for a real estate agent in Buenos Aires or in Argentina, we know a couple. There's a link in the bio where you can book a call with MyLatinLife, become our client. We can help you with residency in Argentina as well as real estate. Moving on to economic and social impacts in Argentina, let's focus on Argentina itself and answer, how does this affect everyday Argentines? The removal of capital controls is both a hope and a challenge. For many, it's a step towards economic freedom, as Milei dubbed it Liberation Day. Argentines who have long hoarded dollars to hedge against inflation can now access them more easily, potentially stabilizing savings. A 73-year-old receptionist in Buenos Aires told AP, "You can't live by controlling exchange rates. I like freedom." And think about it. Argentines used to have to store dollars under the mattress because they couldn't really get them. They used to have cash in the house. And now you don't really need to do that because you can exchange without limits. Here's a lesser known impact. The exchange could reshape cultural habits. Argentines are often called amateur economists, with a knack for navigating exchange rates. The black market for dollars, though illegal, was a way of life, influencing everything from grocery pricing to car sales. As official rates align with market values, these practices may fade, simplifying daily transactions, but requiring adjustment. The downside is not everyone benefits equally. Argentina's informal sector, about 40% of workers, often lacks bank accounts and won't see immediate gains. If the peso weakens, inflation could spike, a concern after Milei's austerity cuts to subsidies and public jobs. Recent protests highlight social tensions, with unions and workers rallying against rising costs. The transition to a freer economy will test Argentina's resilience. Lifting capital controls is a high-risk, high-reward move. The IMF cautions about elevated downside risks, quote unquote, including global trade tensions and Argentina's 2025 midterm elections, which could fuel uncertainty. A currency run where businesses and individuals rush to buy dollars could drain reserves, echoing past crises. The currency band from 1,000 to 1,400 pesos per dollar gives the central bank wiggle room, but if the peso hits the upper limit, it's effectively a devaluation, driving up import costs and inflation. Economist Ricardo Delgado called it a devaluation despite official claims, citing global volatility as a pressure point. For travelers, monitor exchange rates and Argentina's risk index, which ticked up this week. Investors should track central bank updates and peso performance, as volatility could affect returns. The Buenos Aires Times and Bloomberg are solid sources for real-time insights. The upside is Milei's team is doubling down on deregulation and austerity, which could sustain confidence if managed well. Stay sharp and plan accordingly. So there you have it, folks. Argentina's decision to remove capital controls this week is a seismic shift, opening doors for travelers, investors, and Argentines alike. From affordable trips and easier currency exchanges to booming opportunities in mining and tech, the end of El Cepo marks a new chapter, but it's not without challenges. Whether you're dreaming of Patagonia's glaciers, investing in Buenos Aires startups, real estate, or watching Argentina's economy evolve, I hope this video answered your questions and sparked some excitement. What do you think of Argentina's bold move? We'd love to see your comments, and don't forget to like, subscribe, and hit that notification bell for more global economic and travel insights, specifically around Latin America. Until next time, Viva Argentina, and see you in the next video.